Okay, so picture this. You've got a company that's just crushing it. I mean, they've got this incredible new drug, sales are through the roof, everything looks perfect, right? And then, out of nowhere, its stock does something absolutely wild. This is the story of a massive, multi-billion-dollar surprise that nobody on Wall Street saw coming.
And it all kicks off with this number right here. On March 6, 2026, the stock for a company called One Biopharmaceuticals, their ticker is DAWN, just explodes. We're talking up nearly 66% in a single day. Now, look, in biotech things can be pretty wild, but a jump like that? That's huge. But the really interesting part, the reason we're talking about it, is why it jumped.
So that's the big question, right? What on earth causes a biotech stock to just detonate overnight? Was it some miracle drug trial, a crazy earnings report that blew away all expectations, or was it something else entirely? We're going to break this all down, piece by piece.
To really get that 66% jump, you first have to understand the company at the heart of this story. One Biopharmaceuticals wasn't your typical biotech firm. Nope, they were built from the ground up with a really specific and, a really important mission.
Their name actually comes from the day one talk, which is that incredibly tough, heartbreaking conversation that doctors have with a family when their child is first diagnosed with cancer. So their entire goal was to change what's possible right from day one. I mean, what a powerful motivation to have.
So the company decided to zero in on a very specific challenge, pLGG. This is one of the most common types of brain tumors found in kids. And for the families going through this, the journey is just relentless. It often involves invasive surgeries, really harsh treatments, and there's no clear, standard way to fight it.
And this was Day One's answer. Their breakthrough drug, Ojemda. And this wasn't your standard chemotherapy. It's a targeted oral therapy that's taken just once a week. And it's specifically designed for kids whose tumors have a particular genetic marker. It was like bringing a scalpel to a fight that had only ever seen sledgehammers.
And let me tell you, Ojemda wasn't just a medical breakthrough. It was a huge commercial success. I mean, the company's sales figures were telling this story of just incredible growth and, really fast adoption by the market.
The growth was just wow. Absolutely staggering. After launching in 2024, Ojemda's revenue rocketed from about $57 million to over $155 million in 2025. Do the math on that. That is a 172% increase in a single year. This wasn't just good, it was explosive. It was a clear sign that doctors and patients were all in on this new treatment.
And the company was feeling pretty bullish about it, too. They were projecting that U.S. revenue for Ojemda would keep climbing by another 50% or more in 2026, potentially hitting as high as $250 million.
So you see the picture, right? Everything is pointing up, up, up. A breakthrough drug, unbelievable sales, a super confident outlook. But just when it seemed like this company was totally unstoppable, the story takes a really confusing turn.
Right before that monster 66% stock jump, if you were an investor trying to figure out what Day One was actually worth, you'd be looking at a very murky picture.
Just take a look at this. In the weeks right before the big day, Wall Street analysts were completely all over the place. You had Wedbush saying the stock was going to hit $30. But then you had Needham saying, no, it's worth maybe $17. You've got buys, outperforms, holds. I mean, there was zero consensus on what this company was actually valued at.
But here's the thing that would really make any investor just scratch their head. It's one of the oldest red flags in the book. Why were the people who knew the absolute most about the company, its own leaders, why were they selling off their stock? Get this. Just 2.5 weeks before the stock exploded, the CEO, the CFO, and other insiders all sold shares. Now, okay, to be fair, these sales are often pre-scheduled, for tax reasons or personal financial stuff. But to an outside investor, the signal is super confusing. You've got a fantastic product, amazing growth, and the leadership is cashing out. It just didn't add up. And then it happened. On the morning of March 6th, a single piece of news dropped that made everything, the analyst confusion, the insider sales, the entire story suddenly make perfect, crystal clear sense. And there it is, the big reveal. Day One was being acquired. The French pharmaceutical giant Servier was buying the entire company. So this wasn't a story about earnings or trial data anymore. This was a buyout. Servier offered to pay cash for every single share of Day One stock. And the price tag they put on it? $21.50 a share.
That was a massive premium, almost 70% higher than where the stock was trading just the day before.
All in all, the deal valued the company at a staggering $2.5 billion. I mean, what a huge validation of their mission and their amazing drug, Ojemda.
And that's it. That explains exactly what happened. The stock didn't surge because of some new speculation or a trial result. It simply and instantly reset itself to match the buyout offer. So the mystery of the 66% jump solved. It was just the market catching up to the deal price in the blink of an eye.
So, mystery solved. But what are the big takeaways from this whole buyout saga? Well, for the company, it was a massive, massive win. For investors, though, the story is a little more complicated.
Yeah, it really depends on when you got on the train. If you were an early shareholder, someone who stuck with it through all the ups and downs, this was the dream scenario, a giant overnight return. But for anyone thinking about jumping in after the news broke, well, that ship had sailed. The stock was already trading right at the deal price, which means all the upside was pretty much gone.
So from a bigger picture view, this deal does a few really important things. First, it completely validates the science behind Ojemda. Second, it takes away all the risk Day One would have faced trying to take this drug global all by itself. And third, it sends this powerful signal across the industry that innovative, targeted cancer drugs are in super high demand.
So the story of Day One Biopharmaceuticals as a public company is officially over. But it leaves us with a really critical question for anyone investing in this space. As Big Pharma keeps hunting for the next big thing, is the ultimate goal for these small, innovative companies no longer about growing into the next giant, but just about being the next billion-dollar buyout? Something to think about.